Welcome to the WangHiro podcast, where we answer Malaysians' burning questions about personal finance with fact-based answers. Welcome back to the WangHiro podcast. In our previous episode of Financial Audit, we walked Salene, an account executive in her mid-20s, through the steps for opening a brokerage account. With John's guidance, she was able to successfully open her account with Affin-Hwang eInvest Go. If you're interested in learning how to open your own brokerage account, I've included a link to the video in the description below. Now that Salene has a brokerage account, she can buy and sell shares, but that is only the first step in investing. In today's episode, John is going to show Salene how to source market information about a company that will help her make an informed decision about investing. So welcome back to the show, Salene. In our last episode, we closed with saying you were feeling very confident now with investing. So what do you think about what do you think about this step, sourcing for market information? Do you have any clue at all what to do?
No clue at all. I don't know how to source the information in there.
Okay, so I guess today with the click of a mouse and with a keyboard, right? Instead of like getting information, you get too much information. Will you both agree with me or not?
That's true. Personally, I try not to keep looking at my phone so I can filter the information.
Yeah. So maybe I'll ask this question. Maybe to Salene first. When we go into the stock market and you hear or you observe other people, right? Usually when you think about market information, what's the first thing that pops up?
The financial reports.
Okay, good. Thank God you said financial reports. Most people have said, what's the price? Because one is freely available. You can get it from Google Finance. Two is like, wow, today is 3 ringgit. You know, in the even business news or whatever, people talk about the price, you see. So I think I wanted for you to start on the right path, Salene, is because most information out there, a big majority, or I would say 80%, is what I call noise. So market price, certain headlines, certain news that give very brief description, but actually not a very properly researched information. It sometimes can be very misleading and very confusing, actually, to a lot of investors. So in the market, we actually what we try to do is we try to look for information that help us understand the stock as a business. Okay, because when we are actually buying a stock, you're actually buying into ownership of a business. And when you buy into the ownership of the business, what will be the questions that you would think of? Let's just say today, Salene, your friend comes up to you, hey, let's start a pet food business. You know, I remember you were sharing with us in the previous episodes that you were in a small business doing like trinkets, all those gifts and all that kind of thing, right? So before you even got into that business, what was the things that you do that you researched on before you got into the business? What were the things you were looking for? Did you research before you got into this business?
This research part is usually my cousin, because you see there's a market for it.
Understand.
Then I'm usually the like silent investor and helping to craft the products.
I see. Okay. Did your cousin share with you how he or she actually went to research?
She did explain to me a bit. I just like, since I'm into crafts, I think I just like, why not we just try out?
Okay. Maybe I go through a few set of questions, see whether it makes sense to you. First one, you're in a business of gifts, and you know that maybe the first thing you would look at is how much can this guy sell for, right?
Yeah.
You walk into a shop, a gift shop, and whatever, and say, hey, this kind of gift, roughly the same of what I want to produce, is roughly going for like 15 ringgit, 20 ringgit. That's one way to research. Huh? That means you look for the price of how much this product can sell. Two is you got to figure out how much it will cost. So you most likely have to go to your supplier, start either calling them or visiting their factory and say, hey, I know I can sell for 15 ringgit, but what's my cost? Maybe 5 ringgit, 10 ringgit. So you source for a supplier. Then the next thing is maybe you want to look at the market. It says, hey, how are these gifts being sold? When you go into Shopee, you type gift, you roughly like, hey, it's a lot of sellers or a lot of or very little sellers. Or you look around in a shopping mall, how many gift shops are there selling roughly the same thing? So all these are what I would deem as market information to understand the business you're in. And obviously, last but not least, is also, hey, are they profitable selling? It may be in a shop, but they may not be profitable one, right, Salene? Will you agree?
Yeah,
They may be selling, they're selling at 15 ringgit, but their cost is like maybe
very high.
very high. Let's say 12 ringgit for just the product, and then another 3 ringgit for rental, for putting on signboard, marketing expense, all that kind of thing. Obviously, there are ways to find out Salene, whether they make money or not. And unlike the stock market where they have an annual report, you can actually go to Suruhanjaya Syarikat Malaysia, the website. You can actually buy their financial reports.
Oh yeah, SSM.
SSM, yeah, for 30 ringgit if I'm not mistaken. Yeah, about 30 ringgit for one company lah. You can download and find it. Okay. What are the other things? Let's just say you want to get into this business, obviously with your cousin, right? Obviously, you know your cousin since she was young. But let's just say someone approached you, hey, Salene, I like your skill set. You have an accounting skill set and you are in the construction business. You know how to manage the accounts. Why don't we go into the construction business? Okay. Now, obviously, if you want to partner up with this person, right, you got to know his character, his or her character.
Yeah.
Correct. So this is also another information you have to look at. And last but not least, if you want to start this business, you got to know what's your upfront capital. Any business. In your case, for the trinkets, right, you got to know, hey, okay, I think I can sell 1,000 units. And then you got to figure out how much money you got 1,000 units, my cost is how much, you got to put it in. Okay. So all this information is really about sizing up the business. And where do you think, based on this this framework I gave you, besides the annual report, where else can you get this kind of information?
From news.
News, okay, very good. What else?
That's all I think.
Okay, good. This usually from the news, we call it secondary information.
Oh.
Why? Is because the writer who writes this, he or she does not need to get approval from the company to write it. You think about it? I can write a report about you, but do I need to get your approval before the report goes out?
No.
No, right? But for a financial statement or financial annual report, the companies need to sign, right? You're an accountant, and then if you do audit work, right, they have to sign off, right?
Yeah.
Your CFO have to sign off. Your external auditors also have to sign off. Correct?
Yeah.
So these are information which I call primary information because it's already validated by people. The company owners have to agree, they have to sign it off. Auditors have to agree, they have to sign it off. Now, obviously, we take for granted the annual report, but the annual report is the best primary source of information. Okay. What do you think are other primary sources? Where do you think they keep all this in one place, Salene?
In Bursa.
Yes, very good. She's actually in Bursa. So today, if you only remember one thing, you just have to remember this website. Okay. So you type in these things that says Bursa company announcements. Okay. So this is actually Bursa's repository. Every company listed in Bursa Malaysia has to file their report here. Okay, everything. So can if you see this thing that says category here, they have to tell you when they divide their shares. They have to tell you when the annual report or annual accounts are up. They have to tell you when the report is up. Change of corporate information, change in shareholding. If you're a 10% shareholder and you suddenly decide to buy more, you have to announce on,
Oh.
Yes. actually, if more than 5% you're a substantial shareholder, every time you buy, let's say you totally not related to the company. Okay, you have no family relation, you don't you don't know these guys, but because you're already 5% shareholder of the company, you buy or sell, it is considered important, of importance to the public market. You have to make an announcement. The share registrar will have to trigger it actually. A lot of people don't know this, right? So why? Because you are substantial. Let's say you are a very rich guy, you're a substantial shareholder. If you sell, are there things that you know, privy information that you know, that cause you to sell? So let's go. I show you an example. Okay, let's say I have to give you an example because these some are the examples I remember. Mega first. Okay. So I search like change in shareholding. I search. Okay, you see this guy? Change in director's interest, Mr. Yao Xiyan. Okay, so I click here. Because he's a substantial shareholder, even he buy 8,800 shares, you have to declare one, you know. Because one, he's a key officer, he's a independent, he's a independent director for the company, but also because he has quite a number of shares. Percentage-wise, he has 1% of the company. It's quite a lot. Quite a lot. Okay. Direct units 1%. Okay. Deem interest is 0.01. Which is, this company is very, very big. It's 6 billion. Okay. If you have 1% of 6 billion, that means you bought 6 billion, 10% is 600 million, 0.1% is 60 million. The company. Okay. Yeah. You have to declare if you are a substantial shareholder or if you are holding a key position for the company. This is where all the announcements of the company, you have to file it here. So you think of this as the library. Yeah. So far, so good?
Yeah.
Okay. Where else do you think you can get primary information like this? Just now, in the last episode, you opened a brokerage account, right? Now, in the brokerage account, there's actually analysts writing about the company. Now, the analyst definitely may not need to get approval about the the company managers before they release the report, but they have to be factually correct. That it has to be checked and signed off by the head of research before they can release the report. So I consider that as another source of primary information. Now, where do we get that? Where do we get that? Actually, in your broker, remember. So this is my brokerage account. Okay. Where you can find it is just now. You also had a research tab, right?
Yeah.
So you go to this thing that says research product. So you can actually find a company's analyst report. So it says research category, fundamental report, research type. You see, there's a lot of breakdown. IPO note, initiation, industry insights, whatever. I usually like to look for this thing called an initiation report. So what does an initiation report do? An initiation report means it's the first time this broker actually cover this company. And an initiation report is usually quite detailed. They'll tell you what does the business do, what's the size of the market, what's the industry, who are the management team, what experience do they bring, and usually they have quite a elaborate discussion of the company, usually in between 12 to 20 pages actually, for one company. Yeah. A lot of those news break, whatever, this kind of report is very short, 1 page, 2 page. Unless you're already familiar with the company, this may make sense. But most of the time, if you really want to start, actually, an initiation report is the best way to start. Okay, so I'm going to recap. One primary source of information, annual report is one of the best. You can find annual reports also here. Okay, obviously, if you just change this category to annual report and you search, all the annual reports are sorted here, category by year. So Bursa actually, Why we pay Bursa fees is because they are an aggregator of all this. They're the regulatory body, they're also the exchange, and that's where all these reports are actually here, reposited for you. Most people have never been taught how to use it. Obviously, the finance professionals, they refer to this, this is their bread and butter, right? But most retail investors, they are actually not taught to use this. This is free, guys. The best source of information. Rather than, let's just say you want a Maybank, if you want to look for Maybank, you have to go to individual websites, Maybank annual report. If you go to
No,
one
I think you
website,
can get the Maybank report through Bursa.
correct, exactly. I'm trying to show this is to say that if you go to independent, if you go to one company, right, it's every website you have to go. But in Bursa,
All in
everything
one.
is here, all in one. This is like your library lah. Okay. Now, one last place where you can get financial information all together. Where else do you think you can find that? Financial data for all the companies.
Our broker account.
Broker account some may not, some may have, some may not have. But there's actually a lot of free websites. But do not trust all the data because some of the data may be inaccurate. Okay. The best one obviously is if you have a Bloomberg terminal or Salene. A Bloomberg terminal is where you pay a subscription to $2,000 a month. All the company's financial data is actually collated, and then you actually have access on the internet, have access on the terminal. But there are other what we call data aggregators website. So the cheaper, the free one of the free ones is Yahoo Finance.
Oh.
Okay, you can go Yahoo Finance. Okay, you type in a company, let's say Maybank. Okay, you see here, there's a screener. You can type that in. They actually give you financial information here. You see financials. They'll give you the last 3 to 5 years. Sometimes you're lucky that you get 5 years. Sometimes you're unlucky, you only get 3 years. So in this case, you get 5 years. You see?
It's a comparison.
Yeah, 2019, 2020, 2021, 2022. And TTM stands for trailing 12 months. That means the latest 12 months. Rolling 4 quarters, 12 months. So why I say this one is not fully validated is because there may be data errors when they copy and paste or when they key in the data. Obviously, the best source is an annual report from the company itself because that's signed off. But the copy and pasting into this, like Yahoo Finance, because it's free, they cannot guarantee the accuracy. So don't be 100% trust this data. But it's a good enough gauge for you to get another source of primary information about financials. Yeah. Then obviously you can move on to things like a paid one, which is like what I use every day is Ticker. This one contains financial information for any company around the world, even German companies. I can type like Wirecard. Still listed, okay? So this is a German listed company. I can look at financials. I can look at 10-year detailed financials. I can drag and I see more and more years. Obviously, this is a paid one. So far, so good. Any questions?
No.
Yeah. So next, we go to the basics of why we want to source for this information. Louis, can you brief the audience what are the 4 basic questions that we normally go through for any company?
Oh, okay. Let me. Okay. What business do they do and how do they make money?
Mm-hmm.
Are they profitable and financially stable doing what they do? Who is their audience and how big can they grow? And are they cheap or expensive?
Yeah.
I'm just reading off.
Yeah. No worries. This is what we normally, the 4 basic anchor questions, foundational questions that, any investor should ask. It's like a checklist before you start your car kind of thing. I hope I'm making sense.
Yeah.
Yeah. So first question, what business do they do and do they make money? So on the Bursa website, you will not be able to get it because they don't aggregate it like that. So let's say okay, where is the best resource on the internet to know what is a business doing? Company website, right? So let's go to Maybank. Obviously, you will not go to the banking website, I hope. Okay, it's maybank.com, not Maybank to you. Okay. So obviously, it's quite easy because it's Maybank. It's like, I know it's a bank because there's a bank behind it, right? So you can actually go to the company website and click on things like About Us or Our Business, Our Call. You get this kind of questions here. You get this kind of answers here lah, from the what business do they do, how do they make money. What do you think? How do you think banks make money?
Through like interest. They lend people money and then they earn from the interest.
Interest. Okay. Where do you think it gives the what do you think gives them the ability to lend people money?
When we deposit the money into their bank.
Correct. When you deposit money, they're actually using your money to lend other people money. And in exchange for you lending them money, they pay you an interest, a fixed deposit interest or savings account. So they earn the spread, interest income. Okay. So next question. That's how they make money. Next question. Are they profitable and financially stable doing that? Okay. So where do you think we should go? How do you think we should go about answering that question?
Yeah, financial reports.
Correct. So I usually, instead of going straight to the annual report, I like to use what I call a financial data aggregator like this, because I can quickly do a comparison. Is that growing or not growing and things like that? Okay. And from there, if I want to really verify more, then I start looking at the annual report lah. Because it's 1 year by 1 year. I have to build a model, whatever. Yeah. So far, so good, Salene?
Yep.
Okay. Who is the audience and how big can they grow? In this case, who is the audience?
Us.
Us, the Malaysian public lah. So how do I find out if they have like 20% or 50% of the market or the population? We've got 33 million people in Malaysia. Obviously, some of them don't have a banking account.
Yeah.
And those that have a banking account, what is their market share? Right? So we can do this. We can go like Maybank market share of depositors. Malaysia. So you see here, there's a press release that says, being the largest bank, also commands double-digit share of market. 30% in loans, auto loans, 14% in mortgages, 21% in credit card receivables, 19.7% SME loan, and 25% in retail current account. So even though they're big, they only own 25% of the retail current account and savings account. Yeah, so that answers question 3 lah. Who is the audience and how big can they grow? Okay. Last but not least, are they cheap and expensive? Now, this part, we got to go a little bit deeper. Okay. Oh, let's not use sticker. Let's use something free. Let's go to Maybank share price. And obviously, because my search engine is configured to Google, Google will come out the first one, right? This is actually Google Finance. You can actually go do this, Google Finance. It's free, by the way. It's all free. Take Maybank. That. Okay. You also get financial statements here, like Yahoo Finance. Okay. More importantly is this. You get this, like what I call a snapshot of the company. And you get this thing called a PE ratio. Now, a lot of people think that when you buy Maybank, 12 ringgit is expensive, 15 ringgit is even more expensive, and 9 ringgit is cheap. Do you think that's the now it's 873, sorry. Oh, it's very expensive. It's 8 ringgit. If it's 6 ringgit, it's cheaper. Is that the right way? Do you think that a company is cheap or expensive?
No.
Okay. What do you think will be a better representation of whether it's cheap or expensive?
You need to see the earning you receive.
Yes,
The
very
financial
good.
ratios.
Very good. Okay, so is 8 ringgit 76? What does it mean? I use an analogy of a coffee shop again. Okay. There's a coffee shop next to each other, coffee shop A and B. Okay. Both of them want to sell to you for 5 million ringgit. All right. Coffee shop A, 5 million. Coffee shop B also selling to you for 5 million. On the outside, you look at coffee shop A, a little bit more rundown. Coffee shop B just did renovation, got very fancy lights, colorful, nice chairs, whatever. Obviously, you'll be tempted to buy coffee shop B, right? Because it looks nicer. But should that be your gauge or not?
No.
No. Coffee shop A, a little bit more rundown, but actually more customers, and then making 2 million profit a year. Coffee shop B, okay, nicer, hipper, new setup, new renovation, but making only 1 million a year. Okay. Now, coffee shop A with 2 million profit selling to you for 5 million, how fast can you make back your money? The 5 million that you
1.5 years.
1.5 years, correct. Coffee shop B, you need 5 years for you to return. That is the simplest analogy of what we normally call a PE ratio, a price to earnings ratio. Okay, so for Maybank, at 8 ringgit 73 cents, you technically should recover your money in 12.38 years. Am I making sense? That means if I buy, you just imagine Maybank is a coffee shop now, right? I'm buying it, I will return my money in 12.38 years based on the earnings this company makes. Am I making sense?
Yeah.
Okay. If the price goes up, but the earnings remain the same, what happens to the PE ratio?
Decrease.
Price goes up, earning ratio remains the same. So price is the denominator, numerator, the denominator is the earnings.
Oh, so your earning
One above goes
increase.
up, but the one below stays the same.
So your earning also increase.
No, earning the same, but the price goes up. Okay, let's use an example. So just now Maybank is $8.73, right?
Yeah.
So if I divide it by 12.38, which was the PE ratio, it means I'm earning roughly 70 cents per share. Am I making sense? It means at 70 cents, I times 12 times my earnings, gives me this is the price of the share. This is the earnings per share. Okay. PE, price to earnings. Just take this, divide by this. I get 12.38. Okay, now let's just say, same scenario. I just drag this formula across. Okay, let's just say it's now 10 ringgit. Okay, my price, my earnings per share remains the same. What happens to my price to earnings ratio? Up or down?
Down.
Because my price has gone up, but this one remains the same. So actually my price to earning ratio becomes bigger. If this one goes to double, let's say this one is 18 ringgit, this one goes to 16 ringgit, right? Earnings 0.705. E025. It means the earnings of the company remain flat, but then the price has gone up. My price to earning ratio actually gets higher and higher. So what does this mean?
It
If you
takes
want
you
to wait,
longer to earn back.
correct. Which one will you want to buy? At what point when you want to buy? You want to buy at here or you want to buy at here?
Earlier.
Earlier, right? This one, right? So this is actually the better definition of cheap or expensive. You want to buy when you recover your money as fast as possible. Rather, you want to buy when you recover your money longer and longer in the future. Am I making sense?
Yep.
Okay. So I've answered 4 questions. What business do they do? How do they make money? Are they profitable, financially stable at doing what they do? Who is their audience? Okay, I've shown you how to search for it. And are they cheap or expensive? And this is one way to determine whether they're cheap and expensive. So based on what I've just shown you in a case study, right? What was the thing that you found most interesting about how to source for information actually?
That there's a lot of places to source for information, not only Bursa.
No.
Previously, I thought, oh, Bursa has everything you need.
Bursa, everything. Yeah. Louis, maybe some final closing thoughts.
So I think in our last episode where you open your brokerage account, I think that was a giant leap for you. Right now you can buy and sell shares, and now you have some idea about how you can find out more about information about company. How do you feel about investing right now?
Like excited, want to start my first investment.
Even more excited. That's amazing. So did you feel like initially when we recorded the earliest episodes, you felt that investing was very risky
Yes.
compared to FD? Has that changed?
Yeah, slightly.
Slightly. So maybe still a little bit more risky, but not as risky as you might think, right?
Yeah.
Maybe it was used to be a black box, a huge black box. Now you're slowly starting to shine some light into it, and then you start to see like how things work, right? Okay, so it's all very good. So I think next okay, so John, so in our next episode we will be doing more analysis on the Maybank, right?
Correct. So in the next episode, we'll dive even deeper. So stay tuned to the next episode because I haven't covered a lot of other things. This is just like, let's dip our toes first rather than you dive head on.
Yeah.
So
we'll bring you step by step. So if you want to follow Salene's investing journey, make sure to subscribe to our channel, because in the next episode, John will dive even deeper into Maybanks, asking those 4 questions and answering them in a much more detailed way. So if you have enjoyed today's episode, make sure to give us a like and make sure to subscribe to our channel for more personal finance tips. Thank you guys for watching and see you guys in the next video. Bye-bye.